Hi everyone, my name is Robin Speziale and I'm the national best-selling author of a book called Market Masters. You can pick up Market Masters at your local bookstore, library, or online at amazon.com or amazon.ca. So today in this video, I'm going to be talking about how to find your next multi-bagger stock. And when I say multi-bagger, I mean a company that can, not only double, but can triple, quadruple. And while these are hard to find, these multi-bagger stocks, and not many people have a lot of these in their careers and their portfolios, there's some ways that you can try to identify them early on. And the story today I'll be telling is on a company called Lassonde Industries. And the moral of the story at the end of the day, like I know, I have hindsight here now, but in 2008, I stumbled upon this company in the grocery store, and the moral is, buy what you know. And I think that's really the easiest way to hold a company for so long, through a lot of volatility in the market. Because if you don't really understand the company in which you own in your portfolio, it's quite easy to just, sell it quickly when you don't see it performing in the short term. And the real key to achieving these multi-bagger stocks in your portfolio is holding them for the long term. And if you know the company well, you're more likely to have conviction through the ups and downs in the market. And so here's the story going back to 2008. Let's see, in 2008, I was, I think, around the age of 20 in their grocery store. And this is around the time when I really got interested in investing, and I had started buying stocks 2 years prior at the age of 18, and in the juice aisle I saw this brand called Oasis, and I saw Rougemont, and also in the office when we would get catered in meals, like I was a co-op student back then, I would see this one brand, I forget what it is now, but I think it was Allen's. And then I started to study, which is the parent company, who's the parent company of all these different brands like Oasis and Allen's and Rougemont. And I saw on the label, the back of all these juice bottles, it was a company called Lassonde Industries based in Quebec, Canada. And so I typed in Lassonde Industries to Google in 2008, and I found it was a publicly traded stock. And so the next thing I did, it was a company that I've been buying their drinks for a long time now. Like I would call it a second tier juice maker, that stands quite strongly beside like a Coca-Cola Minute Maid or a Pepsi Tropicana. I knew the company well. It had a lot of brand trust in the market. It had, still has amazing distribution, and that distribution is expanding throughout Canada. And so the next step was looking at its financials. And my favorite website for looking at any company's financials is Morningstar. And you'll see in this video, the image that you're seeing now is from morningstar.ca. So I typed in Lassonde Industries on morningstar.ca. And then I clicked on what's called the Key Stats tab. And every company on Morningstar, you can click on the Key Stats. And what you can see is the past 10 years of all the company's key financial metrics and stats like revenue, net income, their shares outstanding, book value per share, earnings per share, free cash flow, return on equity. And so these are all the important things to me. And for a company like Lassonde back in 2008, it just popped out on the screen. Like the financials, the metrics just looked outstanding. The company looked great. So to me, I did that qualitative study of the company. I'd been actually consuming their product, Lassonde Industries products, for years. And then it was the quantitative analysis here on morningstar.ca, which, just validated that this is a well-run company. And I'm going to be walking through some of the key things that I look for that could determine the next multi-bagger stock in your portfolio. Now, when I invested in Lassonde in 2008, it was a much smaller company. Okay, so back then it was around $35 per share, and now Lassonde is $265 per share. So it's gone up about 8 times right, from $35 to $265 per share. So I've achieved an 8 times return on my investment, and I'm still holding Lassonde Industries. It's a part of my 40 capital compounders. You can find that list on my website, robinspeziale.com. But even today, if you look from, if you look on the website, you'll see that from 2008 to 2017 on Morningstar, you'll see that its revenue went from 500 million in 2008, and it's effectively tripled all the way to 2017 to 1.5 billion, and that was just over 10 years. And if you look at the net income, it's gone from 30 million in 2008 all the way to 90 million. Okay, so its net income has tripled as well over just a 10-year span. Earnings per share has gone from $4.36 to all the way to $12.87. Just over that's 3 times again over a 10-year period. And what I love to see here, take a look at the share count. There's been no share dilution whatsoever at Lassonde Industries from 2008 to 2017. And this is just amazing. And so what you can see from this is that management of Lassonde Industries is able to fuel their growth through their own operations, through their own free cash flow, and they're not having to, what I call print new shares to fuel any growth and dilute current shareholders. You'll also see their free cash flow, as I talked about before, right? It's gone from 7 million here in 2008 all the way up to 100 million in 2017. And here in the next screen, and if you scroll down on morningstar.ca, once you start analyzing different companies, you'll see that Lassonde Industries return on equity is very high, and return on equity, or ROE, and ROIC, return on invested capital, are 2 of the most important metrics that I use in trying to identify these multi-bagger capital compounder stocks. And what I like to see is, a company that can maintain a high ROE and high return on invested capital. So the first, in 2008, Lassonde's return on equity was 18%, and still today in 2017 it's 16%. In 2008, Lassonde Industries' return on invested capital was 13.6%, and today they've maintained that. It's at 12.58%. And so this company still, there's high revenue growth, and these are things that I look for, especially when it's a small company. Long term, you want to see high revenue growth, high net income growth, and you want to see that translated into high growth in earnings per share. And what I forgot to mention, actually, book value per share. If you look at Lassonde Industries' book value per share, it went from $25 to 78 in 2017, and that just shows that Lassonde Industries has been creating tremendous amount of wealth over time. This is just looking at its past 10 years metrics for its shareholders. And while you shouldn't expect Lassonde to grow at such a high growth rate in the future, because it is a larger company today, I think its market cap is close to $2 billion. You can use these type of metrics to look for other companies that you can add in your portfolio. Actually, I think its market cap is, sorry, that was my mistake. It's actually under $1 billion. So these are different metrics you can use to identify other potential multi-bagger companies. Again, a couple of the most important metrics is a high growth in revenue, net income, earnings per share, book value per share, free cash flow per share, as well as a high return on invested capital. I like to see at least a 10% or higher return on invested capital. Some of the best companies have an average return on capital of around 15%. At least in Canada, you can expect to find higher in the top tier companies in the US. Hope you enjoyed this talk, guys. If you have any questions for me, you can send an email to r.speziale@gmail.com, and check out my website at robinspeziale.com. Thanks. Talk soon.